Hello, everyone. Today on the final bar, we'll talk about a market holding up just fine in the last 20 minutes, accelerating to the upside, closing the day in a position of strength. Much of the day led by utilities, real estate, kind of the boring stuff, but tech, consumer really coming on at the end of the day for a blow-off rally of sorts into the close. Today, we'll hit the market from three directions: big picture, top-down macro, bottom-up stock picking, sector rotation as well. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the chief market strategist here at StockCharts.com, somewhere in Western Washington. Thanks for joining us every weekday after the close as we break down the market's activity, focusing on the message of the charts, trying to lean into what's working, lean away from what's not working. Focus on the message the markets provide by illuminating the behavior of all the individual investors that make and institutions and others that make up these financial markets. I mentioned, out somewhere in Western Washington, we're actually taking a sort of partial holiday of sorts, working remotely out by a river, out in the woods, and enjoying it a great deal. And luckily, they have good internet, and that's why we're able to keep doing the show every day. So thankful for that. Great guests coming up on this week. We've had some fantastic guests in recent weeks for sure. Some really good conversations about where everyone's seeing the market headed. We need plenty of help, and we'll get it this week. Jason Gephardt on Tuesday from sentimenttrader.com. On Wednesday, Craig Johnson from Piper Sandler in Minneapolis. And then Thursday, Tony Dwyer from Canaccord Genuity joining us on the show again. Earlier today, we had a planning call for next Monday's special on March 22nd called Chart Madness. Greg Schnell, Tom Boley, Grayson Rose, and I have selected 16 stocks. We have put them in a bracket. We will debate the matchups, come up with our final four picks, and crown our proposed winner, what we see as having the best investment potential for the next 6 months. We will be posting the bracket soon, later this week. I would encourage you to participate with us, sketch out your own picks, see how yours match up with ours, and we can follow along in the coming months and see how the markets actually relate to our assumptions made during the picking process. That's coming up on March 22nd, called Chart Madness. Getting to our market recap. So, as usual, preparing for this show, the closing bell show in recent months, if not years, has been exciting because the market often pivots in the last 30 to 60 minutes. And that's kind of a known challenge or a known issue, right? The end of the day is when you have a lot of institutions participating. That's when you have a lot of ETFs that rebalance or need to do anything. Will often come in at the end of the day, and so it tends to be a lot of movement in the last 30 to 60 minutes. Compare that to the first 30 minutes, which tends to be a lot more retail investors, and that's kind of the general shape of the day on average. So today, rallying, really accelerating into the close, in what you could call a blow-off rally, really for no particular reason that I could see in the afternoon, is pretty impressive. And much of the day, I'm sort of sketching out a plan for the show earlier today, and I'm looking at utilities number one. I was looking at real estate number two, and I'm thinking, wow, these are two really defensive, relatively boring, high dividend paying sectors, and they're leading on a day where the market continues to chip higher. How does that make sense? Really, you've seen an acceleration in the last hour. Technology, we're looking at the NASDAQ composite here, but you can see how it really just turned left and just accelerated to the upside, finishing up about 1%, which on the surface doesn't seem that dramatically positive. But this is after being sort of, down earlier in the day, around 11:30, hit the lows of the day. So a nice turnaround and a nice bit of a follow through to the upside. And that sort of encapsulates a lot of what we've seen, not necessarily with technology, but we've seen that, even though there are plenty of reasons why that I could give you for the market to not go higher, stocks continue to go higher. And in general, it's not about what stocks should do. It's not about what they may do. It's about what they are doing. And that's really what trend following, what momentum investing is about, is focusing on the trends. And you're seeing by breadth measures, by the bullish percent index, which we'll talk about a little later in today's show, all going to new highs. That tells you that the market overall is healthy, even with some charts that don't look as good as others. There are plenty of good opportunities out there. Notable sort of outliers today. The small cap index actually finished right, essentially flat for the day, but a little below. There's one of the few things in the red at the end of the day that's kind of worth keeping an eye on. It was down a lot more earlier as stocks in general jumped at the end of the day. That kind of popped up pretty well too. But small caps lagging is not a read that we've had normally. Now, small caps again tends to be over, a lot of financials, a lot of regional banks in the small cap index, and so when financials are down, that's gonna struggle a little bit overall. So it's a little different field than we've had recently. Let's finish off looking at some other asset classes. We'll look at some of the charts. 10-year yields back down around just about around 161 or so. The TLT up about 0.6% today. That's on price proxy. Precious metals are actually up today. So gold and silver really continue to chip away, going up. And the chart of gold is an interesting one. We're gonna look at that in a second. But starting to improve, still coming off of really beaten down levels. So I think it could be earlier on in that sort of rally, but nice to see it bounce higher. Cryptocurrencies gave back a lot. Bitcoin over the weekend hit a new all-time high, just above 61,500. Which is a pretty impressive run, of course, by any definition. A lot of that rolled over here, and you saw a move down, some news out of India that they were going to be doing some, sort of a regulatory focus on cryptocurrencies. So that's hampering things a bit, but still, pretty high above where it has been in history. We're still very much near to the all-time highs there. Looking at a chart of the S&P 500, just refreshing for the close here. So a new all-time high, a new closing high for the S&P. As a mentor of mine, Paul Montgomery, who wrote a newsletter called Universal Economics for probably 50, if not 60 years. It came out every week. It's a fantastic read, and it was sad to see him pass on a couple years ago. But one of Paul Montgomery and others have said, the most bullish thing stocks can do is go up, or the most bullish thing market can do is go up. We focus all these things on reads and different indicators and breadth and sentiment, all of that. And his point is the most bullish read you can get is the price of the S&P or the price of a stock going higher. And that's what we've seen with the S&P 500, making a new closing high, making a new all-time high. It's you should not be that bearish when that sort of pattern is happening. That's what I'm finding myself needing to remind myself of right about now, because I am sort of, I tend to think more about the risk side of it and think about potential downside and look for lines in the sand going down. I don't see that right now. I see the market going higher. We'd have to come back quite a bit for us to break down to the point where I would start to get nervous relative to where we're at. And I think from a stock picking perspective, there'll be plenty of charts that are continuing to go higher. Let's finish off our read of the big picture, looking at some macro charts. We talked about bond prices. This is the TLT. So bond prices up a little bit, yields lower, but again, that is a brief jump. Friday was a huge move down on the TLT. You see a bit of a bounce today, coming up a couple points, but overall, again, the trend in bond prices has been significantly lower. What's interesting about that, though, is if you look at the TLT, we're right down within a rounding error of where we were in the fourth quarter of 2019. That was sort of the floor before it accelerated into early March, came back into the equity low in March, but overall was in a pretty good uptrend for the next 6 months. And we're right back down to those levels for the first time since the end of 2019, beginning of 2020. So we're near the point where you could argue for at the very least, a mean reversion move back to the upside. Now you compare that to what you see with the chart of gold, and I'm seeing a very similar sort of theme. The GLD came right back down to the May, June, July lows from 2020. That's also a 61.8% retracement of the March 2020 to August 2020 rally. So we're right at that really reasonable point to expect at the very least, a short-term bottom. You're also oversold for the first time since November. So interesting to see gold bounce off of there. I think there's more upside to be had for gold. I do know that if we do start closing below 157, that really opens the way to much further lows around 136 or so, which would obviously be another leg lower. We'll try to look at gold stocks a little later when we get to our shifting stock segment. That is our market recap, looking top down at what's happening. And again, today, I think the story is really a risk on move that accelerated into the close. And as always, trends that persist, that continue, that's the path of least resistance until proven otherwise. Our next segment is called sector setup. So step two, we've talked about the big picture. Now let's look at the 11 S&P sectors, talk about how they're rotating around the benchmark. For this, we always start with the RRG, the relative rotation graph. Julius de Kempener, one of our fellow contributors, designed this years ago. I followed his work for many years, and I still think it's one of the best ways to visualize asset rotation of any sort, asset allocation, especially sector rotation, where you tend to have this cyclical nature to how things come in and out of favor. So check out his show, Sector Spotlight, if you've missed it. He does a really good job of explaining this methodology in more detail than we can get into on this show. Now, the weekly RRG does not change that often. It's obviously based on weekly data. And so what you can see is there are 3 sectors in the leading quadrant. What that tells you, these are the best trends on a relative basis. The S&P is there at the crosshairs. So further up and to the right is a stronger trend with improving momentum. Energy is number 1. Again, even giving a bit of a give back today, that shouldn't register on a chart like this. This is more about the longer term rotation. It is telling you energy, financials are the places to be, followed closely by communication services. One of the really interesting patterns on this RRG over the last month or so has been, we had a cluster right there of communication services, of consumer discretionary, and technology, all 3 of those, which all could be considered offense, obviously by most definitions, right? These are the juicy names that have led really into the 4th quarter of last year. From there, they've all sort of taken a break. Now we've seen very much a divergence, with communication services heading northeast, the other 2 heading southwest. Consumer discretionary now in the lagging quadrant for the first time in quite a while, and heading in the direction of deterioration. Now, a lot of these are cap weighted indexes, so a lot of this is based off of the weakness in Amazon, but overall, as a sector allocation exercise, it's telling you to lean away from things like that aren't working, things like healthcare that aren't working. What is working, it's stuff heading northeast, and ideally in the leading quadrant. So the 3 strongest: energy, financials, communications, services. The next 2 to watch would be real estate, which is the only one in the improving quadrant and heading in the right direction. The other one would be industrials, which has taken a bit of a sort of circular pattern to the right of the y-axis, which actually tends to be a pretty constructive long-term pattern. So something to keep an eye on there. Looking a little shorter term, looking at the daily rotations, this is going to get a little more granular into what we've seen over the last week. And here you can see that most of these are heading straight up and down. And what that tells you is the long-term relative picture isn't changing a ton, just the momentum is changing. What I mean is, further to the right means it's outperforming. So the strongest sectors have still been energy and financials, then industrials and materials. But the fact that they're all heading straight down, if not a little bit to the left, tells you that the momentum is coming out of that trade and heading elsewhere. So again, you've seen some rotation just in the short term into consumer discretionary, into utilities, into consumer staples, even into real estate, and it's away from financials and energy. And a day like today sort of shows why this rotation makes a little bit of sense. So again, my goal is to use the long-term rotation, which is still saying energy and financials are in good shape, versus the short term, which tells you there's a bit of a mean reversion happening, which is about right. That's kind of what this has felt like, with a couple of days last week with energy giving back some of those recent gains. Now let's look at the 11 sectors using the candle glance function. So this is a really good way to visualize a group of things. I always think about in my former life at a large buy-side institution. We printed out a lot of charts, probably thousands of charts a day. We had a lot of paper floating around with charts, but we would often throw them all on a table and look for patterns and look for what caught our eye, and we've moved that to a separate pile, which was the thumbs up pile. And this is sort of what you're able to do electronically with the candle glance function. Throw these all in a pile, see what catches your eye. Now I'm immediately drawn to sectors that are continuing up and to the right and don't feel like they're taking much of a pause. Now, what sectors look like that to you? What looks like it to me is communication services here in the upper left, financials there, middle to the right in the middle, industrials and materials, both recently making new all-time highs, and real estate. And this is kind of a surprise. A lot of people, again, don't think of REITs as a thing. Real estate was part of the financial sector for forever and split off. I should look up when that actually was. I would guess that was probably like 2015, 16-ish, I would guess. Maybe a little earlier than that, 14. Somewhere in there, real estate became its own sector. And to be honest with you, they're always a very different look than banks and insurance companies, sort of a different beast altogether. But the XLRE is one to look at. IYR is the other one you can pay attention to. This is making a new swing high again today. It's nearing an overbought condition for the first time since June of last year. And the relative strength has certainly stopped going down. It has absolutely been sideways, potentially starting to make a 3-month relative high. If it gets just a click higher than where it is right now, that's quite a potential rotation there. And this is a sector that tends to pay, these are stocks that tend to pay higher dividends, tends to be a little more defensive, and it might be an interesting place to look opportunistically. When we get to our shifting stock segment, I'll show you a couple REITs that screen pretty well using the scooter rankings, the StockCharts technical ranking based on trends. There's some decent trends in the sector you may want to pay attention to. Looking back up here again, financials and energy gave a little bit back, but that's this one bar relative to this trend. So you can see that the trend in financials has certainly been impressive, continues to make higher highs, higher lows. The risk to this trade is that interest rates have topped, that interest rates come down, that 160, 165 is the peak for quite a while. That would kill this financials trade, at least for the short term. I could see a short-term pause. I don't think rates are done going up, but that's just my sort of big picture perspective. The trend is going to tell you everything you need to know about whether financials are a good place to be. So that ETF continue to make higher highs and higher lows. So making a higher low on a pullback would be absolutely key to watch. Industrials just keep forgetting to go down. And we've talked about the benefits of an infrastructure play, the opportunities there. And I think the industrial sector, when you look at stocks like Deere and others, pretty constructive. Long-term trends have been positive, and this has just been a consistent sector. So it's funny, while we think so much about technology that has pulled back, and you think about whether it has enough to, enough gas in the tank to push to new highs, you have other sectors that are making new highs just fine, aren't worried about the market pulling back. I would certainly be looking there and seeing if there are opportunities there for the long term. We need to take a quick commercial break. We'll be back with my next segment, Shifting Stocks. We'll see you in a minute. Hello, everyone. Welcome back to the show. This is Dave Keller here at StockCharts.com. Thanks so much for joining us every weekday after the close. And I've been instructed by my producer. I technically should say I'm in Eastern Washington. I think I'm about the middle of the state. I'll go with Eastern Washington on her recommendation. Having said that, we love to hear from you, and we would love to answer one of your questions on our next mailbag segment, which is on Tuesday's show. We'll do another one at the end of this week. So keep your questions coming. We've heard from so many of you, and it's been a pleasure to try to answer your questions and help illuminate some of these parts of the market that can be confusing. Try to shed light on tickers and charts that you're struggling with. Shoot us an email to finalbar@stockcharts.com, on Twitter @finalbarsctv, or on our YouTube channel. Just put a comment below the video that you're watching. We hope to answer one of your questions in our next mailbag segment. Also, as a reminder, the new StockCharts TV on-demand website and app are unleashed, ready to go, and ready for you to consume all of our great content from our fantastic group of hosts and experts. Go to stockchartstv.com, put in your email. You can set it up for free. Start watching content immediately. We're also on all the app stores, so check it out and enjoy. Our final segment today is called Shifting Stocks. So we've talked about the big picture, macro, the S&P continuing to go higher, the NASDAQ really recovering, going into the close, really just signaling this all-in market continues higher, which again flies in the face of so much that I have expected based on the euphoric sentiment. But again, the most bullish thing the market can do is keep going up. Second, we talked about sectors, and while certainly the move higher in technology today was a nice thing to see if you're bullish, what more impresses me are the moves in utilities and real estate on a day like today, especially real estate making new, nearing a new 52-week high, if not making it today. Also sectors like industrials that have been in pretty consistent uptrends that continue to impress. Now we're looking bottom-up stock picking. How can we focus on some of the opportunistic moves out there? We're starting with cannabis stocks. I tend to not talk a ton about things like Tilray and others, just because there's not a lot of market cap there. They tend to be much more speculative, much noisier. However, a day like today when TLRY, which is probably one of the more commonly referred to, U.S. listed cannabis equities or marijuana equities with a nice bounce up over 10% today. POTX is one of the ETFs I would follow. There are a number of them, MJ and others that are trying to focus on this space. They many of them rate pretty highly on the scooter rankings, and a nice bounce so far. They pulled back obviously significantly. This was, a big blow off rally into early February. It came off quite a bit. So this ETF in particular came from 29 all the way down to 14 in about 3 weeks. Now has regained a good amount of that and now making a new swing high from that previous high. So this is a very choppy space, very volatile, but worth noting. Could be certainly an impressive long-term play, but a lot of noise between point A and point B, I would say, in that place. Now, elsewhere, where you're seeing interesting moves today are in airlines. This is Alaska Airlines making a new 52-week high today. You can see the space overall up pretty good. If you look at jets or other ETFs, American Airlines and others, I forget which airline, it might have been American or United, I actually forget which one I'd seen, but said this weekend was their heaviest traffic since last March. So that's a pretty nice nod to travel. And anecdotally, I spoke to a friend who traveled this weekend who said the airport looked like in Seattle here looked like it was just a normal kind of travel weekend. So that is a far cry from the ghost town that airports were not too long ago. So showing you there's certainly people anxious to get back out there. The airlines are seeing that, with most of the airlines up pretty good today, making 52-week highs, all-time highs or near that, but certainly emerging out of a pretty dark place. Related to that, sort of the reopen trade is pretty good today. LVS, other gaming stocks up pretty good. So LVS, sort of a nice consolidation here. It broke above resistance right at 60. And again, none of this is ever easy, and I don't mean to ever imply that what you do if you're investing is ever easy. I don't think it is. I think it's challenging, and I think dealing with the emotional side of investing is the toughest part. The charting part is the easy part. Analyzing the charts isn't that hard. It's actually doing what the charts tell you that is the really challenging part. However, sometimes the chart just kind of makes sense. I think LVS might be one of those. If you take the move, the all-time high there in January of 2020, the first leg down was here in mid-January of 2020. It bounced higher and actually made a lower high in February and then fell off a cliff, as most things did. Fast forward to November of 2020, you can see it came right back to that same price level, $60 a share, hit it 4 different times, if not more, over this 2-month period, came off, finally broke out above it, retested that from above, and now has broken higher. So, looking at this stock, having a line in the sand or a stop around 60, I think makes a ton of technical sense and respects the fact that this is broken out of a pretty good long-term base. The challenge is all-time highs, which is here 70 to 72, but I think at the very least getting to that point makes a ton of technical sense, and a break higher than that certainly suggests the greater potential for much further upside. But LVS is an interesting chart to look at right now and not get overbought today, even with the rally. Let's check in on some of the not the reopen names, but the we're stuck at home names. Zoom, not bad. I mean, up 1%, but again, these stocks have not really done much in the last week or so. Zoom actually made a new low, undercutting the January 2021 low, which is not encouraging. The question is going to be, if it does get back above its 200-day moving average, which it has not done yet, is it able to get back above these previous highs? Otherwise, we're in this pattern of lower highs and lower lows, which, as you know, because I say it many times a show, is the classic definition of a downtrend. Peloton, interesting, and I think if there's one to watch, this is it. I might have had this as one of the 3 and 3 at some point last week, but a bounce off the 200-day moving average, a bounce off Fibonacci support, a bounce off the November lows. All of that has happened in the last week or two. The question is do we make a higher low? Does it bounce off the 200-day and accelerate upwards? That would be incredibly encouraging and signal that there's more life of a stock coming out of oversold conditions at the 200-day. If it fails through that, I think this chart immediately looks really, really ugly relative to, again, the fact that other stocks are working so well is why the relative strength has been pretty tough. Roku doesn't look as bad. Roku looks more like a lot of technology stocks, which have sort of had this nice run. They made new highs, and then this sort of stepwise downtrend. Again, similar to Peloton, oversold, similar to Peloton coming off its January lows. Again, stocks like this able to hold that and build the base and turn higher, very encouraging, but I'd be concerned about a break below 325 on Roku. I think that that suggests much further downside potential. It's much more of a classic topping pattern. And I'm jumping around a ton. These are just stocks that came up as I was going through my own process. Plug Power, which is part of the renewable energy equipment group. Includes solar stocks and other things like that. One of the highest scooter ranked mid cap stocks, very similar to the Roku chart, although the price characteristics a little different, but it sort of had this downtrend. And in the short term, I can't miss the fact that it's making lower lows and lower highs. I'd want to see a higher low before I would even consider something like Plug Power. And that's what we've not seen yet. Now, we talked about utilities, and again, the sector chart isn't the best, but it's not that bad. It's actually, the top ranked sector today. What is in there? So the highest ranked stock within utilities is still only the 79th percentile. That's not great. So if you're a stock picker, there you're going to find a lot of better charts than you're finding in utilities, but this was the best ranked one. So if you're looking for individual names within utilities, this might be the place I would look. Again, it's actually had a consistent resistance level, higher low coming off the 50-day. That's actually not bad. Yield around 2%. So AES isn't a bad chart. Again, just the scooter ranking being 79th percentile means there are just better opportunities out there. I did want to point, sorry, we're going back to consumer here, but a couple of these consumer names did really well, apparel stocks. So Nordstrom, JWN, making a new swing high and really completing what I have to say is just this incredibly gorgeous cup and handle pattern. Big rounded bottom coming off the January 2020 high, big low, and then come back to retest the resistance around 42 today, breaking out to the upside. That measures a lot higher. And I think that's a really good long-term opportunity potential there. Kohl's KSS, different read, but similar, sort of making new long-term highs, finally getting above the late 2019 high actually, and continuing to push higher pretty good. Finally, real estate actually doing pretty well. Price of the ETF of the index doing pretty well. So a couple stocks to highlight. If you screen for the highest ranked stocks within the REIT space, within real estate, you're going to find some stocks that have a pretty good scooter ranking, above 90, which means top 10%. Park Hotels PK was actually a pretty interesting stock breaking higher. SKT is Tanger Factory Outlets. This is actually a small cap name, but a pretty good chart with a pretty good yield. NMRK is Newmark. And again, these are small cap names you may not be familiar with, and I do some deeper diving on there if you're interested. In terms of large caps, the best ranked one is SPG, Simon Property Group, which is in the retail REIT space. But again, just looks like a nice financial stock, higher highs, higher lows. And I like the look of charts that are continuing to be in a slow and steady uptrend. We need to wrap the show. Go to the 3 and 3 charts in 3 minutes. Here we go. Chart number 1 is the bullish percent index, which is $BPSPX. This is a common way to look at breadth using point and figure charts. So it looks at 500 point and figure charts. How many of them have most recently been on a buy signal? How many have most recently been on a sell signal? This is the percent of the S&P most recently on a buy signal, just today getting back above 70%. And what that tells you is overall, 7 out of 10 S&P names have had a buy signal most recently on the point and figure charts. That remaining below 70 would make me question a rally, which is one of the things I've mentioned up until now. The fact that it's back above 70 tells you we're in pretty good shape. The concern with this index has been a successive pattern of lower peaks in the breadth reading every time the market's gone higher, and it'll be interesting to see if we're able to get above February's peak in that breadth indicator. Chart number 2, the JETS ETF. This is one of the airline indexes or ETFs that we pay attention to. I'm very impressed by a new relative high, continuing to break out. Extremely overbought there at the end of February, and now a break again to new highs. I think this measures higher. It's a pretty decent uptrend. Finally, gold stocks. So the GDX has come off of the 50% retracement level using the March low and the August high. That's not bad, and it's coming off of support from last June. So overall, potentially a really interesting setup. I tend to be much more attracted to charts that are in longer term uptrends and have pulled back in the short term. But I am very keen on things that have been beaten down and are starting to show accumulation. I think gold might be in that situation. Folks, that is our show. Thank you so much for watching the Final Bar every weekday after the close. As a reminder, get your questions to us via email, thefinalbar@stockcharts.com. Finally, the new StockCharts TV on-demand app is ready. Go to stockchartstv.com. Check it out. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.